watching the Fed kicking off that big two-day meeting today as calls for policymakers to cut rates grow. Our next guest isn't too worried, saying earnings season so far has been a, quote, tired Goldilocks story. RBC Capital Markets head of U.S. equity strategy, Lori Calvisina, joins us now here at Post 9. She has an S&P target of 5,700. Lori, so tell us about this tired Goldilocks story and how that factors into what the Fed does or doesn't do.
Sure. So, look, I think as we go through the earnings calls, right, my team and I, we divide up the sectors we read. We try to sort of piece together the story, and that's a little bit challenging early on, right, where all the data is still coming out. But I think what we're seeing on the macro demand outlook consumer has been sort of an ongoing combination of resilience we're managing through. But, hey, sure, we are acknowledging some pressures from interest rates, from inflation. So that's where kind of tired Goldilocks came out, and that Goldilocks is doing a whole lot of work right now, but we still seem to be getting through it okay.
So if you're a Fed official then and you are talking with Lori and your team about kind of what you've garnered from these conversations on the earnings transcripts, what does that say to you? Does it say it's time to cut rates because, things are okay, they're holding up okay, but things could deteriorate from here? Or do they look kind of better than maybe the market is giving credit for, and therefore maybe it's best to hold on?
So look, when I talked to our rate strategy team and they said our Fed call, they're looking for September as the first cut, and then they're looking at every other meeting. And so they see the next one in December. And, when you sort of take their views versus a lot of the other rate strategists on the street, they're looking for a shorter and shallower cycle. And a lot of that is, I think, because they do have this underlying idea that the economy is fairly resilient, and they might have, sort of a greater faith in that resilience than maybe some of the other forecasters on the street. So, does it change anything on September? No. Does it maybe temper your expectations longer term? Probably.
It's okay not to know all the answers, Lori, and you make that clear when you talk about the answer to whether this rotation that we've seen is durable. You discuss that in some of your notes. Is it short term or not? What is going to help you sort of formulate an answer to that question?
Sure. So, it's a great question. And I find that there's just such a consensus now. Like, the rotation has started and it's got more room to go and everybody's been waiting for it. And I'm hopeful, and I'm seeing things that indicate from a trading side, the positioning on CFTC, for example, NASDAQ 100 futures, they've barely turned lower. That being said, if you look at small cap futures, that's the other side of the coin, they've surged pretty hot. And we've now gotten into net long territory. We're getting pretty close to where we were last December and January when the trade topped out. So we do want to be mindful of head fakes. So I'd say watch the positioning data pretty closely. But I'm also watching earnings sentiment. And this is really more thinking about that short-term trade. But if I look at the rate of upward revisions between Russell 2000 and S&P, so just a gauge of earnings sentiment, are we taking numbers up or down and who's doing it the most? That stat favored large caps for most of 2023 by a mile. But guess what? November, December, when we got that little move in small cap, that gap closed and small cap went back to parity. Well, guess what happened on that stat the last, month or so? It's gone back to parity, and it's, again, right back where we were November, December, early January, where it fizzled out. I want to see that data point really move firmly in small cap's favor. It's not just enough to catch up and sort of take away the large cap leadership there. I think small caps have to assert themselves.
Yeah, but it's unclear they're going to be able to do that. I mean, the earnings power of the largest caps would seem to be pretty strong right now.
Right, and we also look at this on top 10 names in the S&P, kind of a proxy for Mag 7 Plus, and then we compare it to the rest of the S&P. That stat is very much still dominant for the top 10 names, even with these little missteps that we've had early on in reporting season. It's narrowed a tiny bit, but there's still a lot more room it needs to fall, to really convince us that the rest of the market that the earnings enthusiasm is there.